Hello, I'm Tim Beggins, president of Elk Trading Company. In today's natural gas weekly recap, natural gas prices are down, currently trading at 306.30, excuse me, 306.20, down 4.4 cents or 1.42%. As you can see here, we really have the RSI flatlining, pancaking, which tells us it doesn't really know where it wants to go. But since we peaked out all the way back here on June the 20th, every Monday has been really quite rough. We've only had 2 Mondays in the green back on June the 7th and, of course, June the 14th. But it didn't last long. So, do we get another rug pull on Sunday night with the weather forecasts? And we'll see if London traders want to just push this thing lower again on Monday. But let's take a look at the hourly chart. And currently, right now, we are currently right at that pivot support at 306.40. Currently just down one tick below that at 306.30. Our next support level at 301.40. And well above that is resistance at 315.60. The RSI in the hourly has turned lower, so we'll be expecting a push down as the day progresses. And let's take a look at the front to back spreads. This is the Jan versus the October spread, which is currently up a little bit, up just 7 ticks to 1303, or up 0.54%. This isn't too much. The RSI is also just kind of going sideways, tells us the market really does not know where it wants to go in the front, but at least it's holding the risk premium for winter. And why? Well, we don't really get a forecast for the ENSO, whether it's La Nina, El Nino, or whether it's neutral, until about August the 10th. And that means that the market still has a lot of uncertainty about what the upcoming winter will be. And here's the Jan versus the April spread. This is Jan of this winter coming up, 2026, and the April contract, the first month of its storage injections. Right now, this is an Elliott wave, impulse wave pattern overlaid on the price action. As you can see, it's a potential fifth wave lower, and that means it may be bottoming. And that's what the RSI may be indicating as well. It's converging with prices. So is the market starting to bottom out here for the Jan versus the April contract, which means that the marketplace will start focusing in on winter as summer exits stage left. But here, it's not quitting just yet. It's the 8 to 14 day temperature outlook. Yes, it's above normal in the desert Southwest where we have a drought, and it's August. But look what else we have. We have some above normal temperatures from Lake Michigan all the way back down to North Carolina and, of course, Florida. And here's the tropical outlook. As you can see, it's really saying that we've got some about 20% chance of something developing off the coast of Florida or the southeast. And then as we get into August, it's starting to say, hey, look at the mid-Atlantic region. And here's why. We're starting to get some storms coming off of Africa. As you can see here, they are starting to move toward the west, and we'll look to see if anything develops. But why the uncertainty? Well, here we have it. Our Saharan air layer, our dust dragon, is continuing to push further off to the west again, and it's inhibiting any development of these storms in the mid-Atlantic region. And this shows no sign of abating anytime soon, which means more dust is going into the Caribbean and, of course, over here into Texas. Thanks a lot. Makes us miserable. And here's the drought. Of course, it's an ENSO neutral summer so far, and right now we've got a drought still developing out in the desert Southwest, especially parts of New Mexico into Arizona and all the way up there in Idaho. But we've got some relief, obviously, with the rains that have been falling in Texas in late summer, late spring, early summer, and of course into Florida. So the drought is abated here, but it continues to be very difficult in the West. And let's look at the U.S. nuclear outage graph. As you can see here on the bottom, it is starting to bottom out. So it happens normally around this period of August and then starts to increase. The outages start to gather as the nuclear power plants start to go down for refueling and maintenance in the northern tier of the country as the weather starts to abate. They've got to get ready for winter. And let's take a look at the stocks in the oil and gas E&P sector. This is a market cap between $2 and $10 billion and a high short float over 10%. Well, it's been a terrible week. As you can see here, CRK or Comstock Resources is down 18%. CNX is down only about 6%, but it's been a really tough week for all the oil and gas sector stocks here. Why? Equities are taking it on the chin again today as Trump has changed the tariff tune. And also, it's August the 1st. Typically, you sell in August and go away until we get a Santa Claus rally. So stocks, even though they did better than expectations on earnings and income, well, they're still under the chin. And that means that this continues to be an underappreciated sector of the economy. But that may be because tech is simply crowding out every other theme. As you can see here, for recapping the September contract, we're currently trading at 307, down 3.6 cents or 1.16%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.